I'm about to show you 3 global crises that should have destroyed the stock market, but they didn't. In fact, they helped investors. And I say this with over 20 years of professional investment experience. Here's the thing, the same volatility that scares most investors is exactly what allows you to grow your portfolio, protect it from major shocks, and generate income through options every single time. So stick around. By the end of this video, I'm going to show you a really simple, but a much more balanced way to manage your money so that volatility works in your favor. You see, most investors think the market is only profitable when things are calm, but history shows the opposite. Markets climb a wall of worry. So let's take a look at 3 headline-grabbing crises and see what actually happened. In early 2020, the world shut down, flights stopped, cities locked down, entire economies froze, and we thought the world was about to end. And stocks crashed around 20 to 30% in just a few weeks. But look what happened next. The market recovered rapidly, and today it's roughly doubled since then. And if you'd stayed the course or invested during the panic, you'd have been heavily rewarded. In February 2022, Putin launched Russia's invasion of Ukraine. Markets feared energy shocks, global recession, and maybe even an escalation of a wider European war. And markets fell sharply yet again. Many investors thought this could spiral out of control. But the market stabilized and continued to rise and make new highs. In 2025, Donald Trump launched a sudden wave of aggressive tariffs. Investors feared supply chain disruptions, global trade slowdown. Again, markets dropped, but once again, the panic passed and economies adjusted, businesses adapted, and long-term growth continued. So here's the key point. This pattern isn't just limited to these 3 cases. It repeats again and again and again throughout history. We have shocks and markets panic, and yet over the long term, markets recover and always move higher, regardless of what the event was. We saw this after the September the 11th attacks. We saw this after the global financial crisis. And we saw this after the dot-com bubble burst. We saw it going back to all the wars and crises and famines and pandemics we have ever had. Observe history, and you see exactly the same pattern repeated over and over again. Short-term panic, long-term growth, always, regardless of the headlines. So crises have very little correlation to stock performances. In the short term, we see volatility, as we have just seen. In fact, the market hands us a handful of opportunities every single year, and most investors don't take advantage of these opportunities. So the average crisis creates 5.2% of volatility in the short term, and within 47 days, on average, we go on to revisit previous highs. You see, markets don't price today, they price the future. And over time, what drives markets are not crises, but more permanent things like innovation, productivity, and entrepreneurship. And that's why long-term investors who do things properly always win. And that's why Warren Buffett is the greatest ever investor. It's time in the markets, not timing the markets. But look, for some investors, stocks may not be what they want, and that's understandable. And you don't need to have a stocks-only portfolio to achieve long-term financial independence. Now, here's something really interesting. For investors who use options, volatility isn't scary, it's actually profitable. Why? Because higher market volatility increases options premiums. You see, every time the market swings, the price of options rises, which means you collect higher income and you can sell options on high quality stocks, i.e. rent them out for even higher income. So this is exactly what we teach, using volatility to create consistent and recurring income. So the fear everyone feels during a crisis, that's actually an opportunity in disguise. So here's how we do it. It's called the GPI Framework. It's using my experience and knowledge over the last 20 years within professional investment management. It's very simple, set and forget investing using 3 essential elements. Number 1 is growth assets. Growth is super essential because you want to create future financial security, right? You get inflation beating growth with growth assets. Protection is super important for the reasons we've talked about. And for protection, it smooths out the market volatility, which may or may not be important to some people, but it helps to provide stability. And finally, income. We all need income to live off. And whether you need income today or tomorrow, it's essential to create cash flow for your requirements. And with options and high dividend stocks, you get a very rich source of income. You see, when we combine these 3 elements together, it makes for a highly effective and balanced portfolio for passive investors looking for both growth, protection, and income in their portfolios. You see, the goal isn't to bet everything on stocks. The goal is to build a portfolio that can survive almost any environment and keep compounding your wealth along the way. Because when you structure your investments like this, volatility stops being scary. It becomes your friend. The world has faced wars and pandemics, financial crises, terrorist attacks, and countless economic shocks. And the one thing that stays constant is that markets keep moving forward. Next time the headlines feel terrifying, remember, fear is temporary and long-term investing just works when done properly. So if you found this useful, subscribe for more videos on simple evidence-based investing. And if you want to learn the GPI framework for building a resilient portfolio that's balanced and will keep growing during the long term, and how to generate income from options during volatile markets, check out the resources below and I'll see you on the other side.